All right. All right, D-Gens, what's up? It's Friday. It's Max. It's Trades and Gains, powered by Investor Central Club. And Christmas leftovers, well, they're still in the fridge. And Wall Street is absolutely not relaxed. Because while retail is debating whether to YOLO into the Santa rally hopium, institutions were quietly loading protection, rotating risk, and hedging like the party ends on Monday. In today's FlowScanner data, oh, it tells that story perfectly. So let's go ahead and break all this down. The largest options flow of the day, what the big money is actually betting, and why price action lied to you again, kind of like your ex who said they'd stop cheating. So, quick setup, this is what FlowScanner is going to show us. It's not vibes, it's not Twitter opinions, it's real institutional money. It shows size, direction, and most importantly, intent. We're tracking premium concentration, call versus put imbalance, repeated contracts, and what is hedging and what is speculation. Now let's talk about today's biggest tells. QQQ came in first place today. We had about $202 million in total overall flow with a measly $3.7 million in calls. So you know what that means? We had about 198.47 million into those puts. Our most common contract of the day were the QQQ 615 puts for January 2nd of 2026. So that's for next week, folks. And we saw this contract get hit about 10 times. Now, if we go and look at the big money, for QQQ specifically, we can see what our largest contract was. So it looks like we had a 191 million put into the $574.78 strike for June 18th of 2026. Only $1,500 per contract. So that definitely is institutional. That is not a retail buyer, folks, because that is about 120,000 contracts with only 1,800 in open interest. I expect to see this flip into open interest by Monday next week. Now, this is not dip buying. This isn't bullish conviction, AI moon mission energy. This is risk reduction, volatility insurance, portfolio hedging into year end, and the translation for normal humans is big money does not trust tech strength at these levels. If QQQ rips, they're protected. If QQQ dumps, they get paid. That's not fear, that's just simple discipline. Now, next up, we had NVDA. That came in second place. That was 29.9 million in total flow with about 18.3 million going into calls and 11.6 million going into puts. We had 16 hits on the drum roll, please. Bang. What? Oh, because I only have it highlighted big money. We had 16 hits of the February 20th, 2026, 185 calls. This is an ultimate delta hedge, by the way. Or not delta hedge. These are puts. So that was our most hit contract. 185 puts for March 20th, 2026. And that's not really shocking because let's be honest, we just saw $198 million in puts bought for QQQ to get protection going into the year end. So very interesting flow with tech today. Overall bullish, but still, let's go look at just the normal flow for NVIDIA since we did see a more bullish sentiment. We'll go ahead and filter that by premium. So it looks like we had some big money prints as well. The 190s, the 200s. Again, these are the 190 is probably a delta hedge. And the 200s, this is a speculation that this move is going to continue upward. This isn't gamma squeeze chasing. It's all in AI mania. This is selective upside exposure. This is defined risk. This is post-run positioning. Institutions still like NVIDIA, but they're not pressing bets here. That tells you the upside still exists, but confidence is measured, not euphoric. Now, next up, we have SPY with 25 million in total overall flow, 3.5 million in calls against 22 million in puts. Our most common hit contract were the 685 puts due for March 20th of 2026. 116 2026, so January 16th 2026 and March 20th 2026 are very much on my, or no, February 20th, are very much on my radar. A lot of the big money and rotation plays I'm seeing are aiming for those dates, so just keep that in mind, folks. We had a big money print of 1.74 million on these, and this is just textbook index hedging. This isn't panic. This isn't crash bets. This is protection against thin liquidity, post-holiday volatility, and macro headline risk, because we have a big macro week next week. Translation: institutions are staying invested, but they're also wearing seatbelts. Retail, they see green candles. Smart money sees tail risk. Now, next up, we add silver, the sneaky fox of the group. 22 million in total flow. The calls just absolutely dominated. 19 million against only a measly 3 million in puts. Our most hit contract for silver were the puts, surprisingly. $60 puts is what we were seeing. Now, if we look at the overall flow in silver, we can see a lot of big money bets coming through on the $70 calls. 4 million up top. So looks like there's still some more upside expected. 417 2026 on our 4.2 million. So maybe we're going to see some more bullishness out of silver going into Q2 of next year. This is clean directional exposure, classic. It's inflation sensitivity, rate volatility hedge, and a commodity diversification. When silver and gold start showing up while equities get hedged, that's definitely not random. We're diversifying just in case. Now, Tesla came back to the casino grounds. We had 16.67 million in flow with only 8 million in calls against 8 million in puts. Our most common contract here, we're looking at the $500 calls due for January 16th of 2026. Now, Tesla did make a nice move today. It did dump, but there are analysts who believe we could see $800 from Tesla this year. So I don't know. I don't know what to think about that. But for the most part, when we're looking at our big money bets, we're seeing 470, 475 for 2026 as well. About 4 million dumped into those. Again, Tesla can sometimes be a casino. It's mixed. This screams that people are range trading. There's event optionality because, as you know, we probably have some Tesla events coming up, and there's no real clear edge here. Institutions are not confident here, and that's all that's really showing. And then the last two we're going to talk about are GLD and IWM. GLD, we had 7.3 million in total flow, 7.3 million in calls. And that makes sense because we're seeing a lot of hedging on the indexes. So why wouldn't we see some gold flow here? As we can see, 870 total. If we look at the overall flow, though, we're seeing some big money bets come in on the 417 and 418. So expecting a little more upside. As you can see, the spots they're buying these at, I mean, this thing only needed to move 73 cents to go in the money. A 0.18% expected move and a 0.09% expected move. And these are both fresh positions because the volume is greater than the open interest. This is small, clean flow, let's be honest, but it's with no put pressure. And on the IWM side of things, we saw 6.12 million in total flow with about 4.6 million going into calls against 1.47 million going into puts. With that IWM contract, if it wants to load, with that IWM contract, let's just go ahead and raw dog and look at the flow. Looks like the majority of it came from the 253 calls due for January 30th of 2026. Yeah, that's pretty much what's going on there. There's really not much more to say, you know. Next up, we have, yeah, that's all. Yeah, those are the top I wanted to take care of today. if this was a true risk on rally, IWM would be exploding, by the way. And if this was panic, GLD would be even bigger than it is. This is selective hedging out of those two: selective exposure and selective confidence. Now, the big picture takeaway is Wall Street isn't bearish. Like, this isn't telling me that Wall Street's bearish. It's cautious and prepared. The NASDAQ, it's hedged. SPY is protected, and AI is still liked, but it's sized responsibly. Metals, they're quiet insurance, and small caps are still getting ignored until we get another rate cut. This is what late cycle positioning looks like. So if you're trading off of price only, headlines, and vibes, well, you're already late, because FlowScanner shows you what price won't. You see where institutions hedge, where they take risk, and where they're just not playing. And if you want to trade like professionals instead of reacting like Twitter, you know where to find us: investorcentralclub.com. Use the code HOLIDAY25 to get 25% off your first month. And we have a great Discord community that you'll get to join. I live stream the flow every day. So yeah, come through, hang out, have fun, because that's what this is all about too. So hope you guys have a great rest of your day. Make sure you like, comment, subscribe. Tell me one thing that you're looking into to buy into next week, and maybe I'll join. But yeah, see you guys Monday, and I hope you have a great weekend. Happy holidays and a happy new year.